Hi, Dominique, and welcome to another edition of the week ahead. I hope you're well. So let's kind of, I guess, dive right in on kind of your
Sure.
thoughts and
But
insights.
before we start, Andrew, what happened to the palm trees?
Let's see if I could go back to.
Ah, beautiful. I can see your suntan appearing.
Exactly. So great. So excited to do another edition of the week ahead. So let's kind of dive it right in and get your thoughts on. It's kind of a weird week last week. Kind of, I guess, the market moves, some interesting comments by Fed officials, and obviously market reaction. So yeah, kind of what did you take away from last week?
That basically the market only listens to what it wants to listen to. Bostic commented that the Fed could pause in mid or late summer, which means basically late summer is after the July meeting. So he implied 4 more hikes of 25 basis points, but the market only heard the word pause, ignore the rest. That may not be the only reason why we had a rebound on Friday. But what's coming out of the Fed chatter is clearly they are raising the terminal Fed funds, probably by 50 basis points. And the question is, do they do 25 or 50? So we had Kashkari who said he was open to 25 or 50. Some support that I'm sure Bullard and Mester, who pushed for 50, even though they are non-voters, they pushed for 50 in January, but they were on their own, so they'd be delighted to get support from fellow FOMC members. But I think we're going to have a hint of whether 50 is possible when Powell delivers his testimony to Congress. This week we have the Humphrey Hawkins testimony, so the biannual testimony. He already published, the Fed already published a report that is presented to Congress for this testimony. It's a very standard report, but there were a couple of interesting nuances, like, for instance, the discussion of the Taylor rule, which is a standard discussion in all of these reports. It was omitted a year ago. The senators asked Powell to put it back in the report. So it's been in the June 2022 and in this report. But if you look at how the Taylor rule was discussed before, it was all about explaining that it was irrelevant. And now, this time around, there is an additional paragraph saying that the Fed has already eliminated a big chunk of the gap of the Fed funds with the Taylor rule. So it looks like the Fed is under pressure. There was this column in the Wall Street Journal by 2 former Fed presidents. Powell is going to face possibly some tough questioning from GOP senators. So the Fed is slowly waking up to the idea that maybe the Taylor rule is not so irrelevant after all. So in other words, it's getting more hawkish. So that's what was interesting in this report. In general, a more hawkish tone. And the event of the week is the testimony, especially on the Tuesday, the testimony to the Senate, because senators usually have tougher questions. And if Powell wants to go for 50, he's going to drop hints since the pre-meeting blackout starts next weekend.
And I guess he'll get pushback why inflation isn't coming down fast enough from the Republicans, and I guess from the Democrats, he'll get pushback on, are they being too aggressive?
Exactly.
And are they, I guess, looking out for poor people? Do they really have to force unemployment as much as they've discussed in the past? Is that just generally like the way it's going to play out?
Yeah, more or less. And it's interesting because it shows how far the Fed has allowed its mandate to get stretched by politicians, because the mandate of the Fed is not income inequality or looking after poor people, who I agree need to be looked after. But it's not the job of monetary policy. But the thing is, with QE, with this sort of a magical instrument where you can generate money where there was none before, the Fed has generated unrealistic expectations on the part of politicians, and that makes it that much tougher to do the unpopular but needed things, which is to tighten more and to bring down inflation, and that means a recession. Anyway, we are not there yet, but yeah, you're right. It's going to be, don't you dare raise unemployment. Don't you dare leave inflation where it is.
Right, basically. Okay, that's great. And price action, I guess, we saw, big, sell-off in bonds, risk kind of hang in there, and then risk kind of rallied when it looked like. I also was kind of surprised that it rallied, that even fixed income rallied so much off those comments of a pause like 6 months from now. Or 5 months from now. So were you surprised? Do you think that anything investors should specifically take away from that?
So I think it's just a short-term market move, and I'd be surprised if it, if the rally continued this coming week.
Yeah. So from last week, which there wasn't a lot of specific data or events, you touched on one, Humphrey Hawkins. So what are the key things that investors should be looking out for next week? And are you kind of significantly out of consensus on any of the stuff coming out, or focusing specifically on anything that maybe the rest of the market isn't?
So like the rest of the market, I'm focusing on the payroll, but I'm out of consensus. I disagree with the median forecast, 200. So to be clear, I'm not expecting a repeat of a 500, and it's very likely that this 500 will get cut down. But the consensus forecast assumes that basically we are going back to the employment path we had before the data revisions. And if there is one thing the revisions showed, is that employment growth was much stronger than we thought. So I disagree. I think 230, perhaps even close to 250, is a more likely number. I'm also looking out for a small increase in participation, maybe 5 basis points, because what's 5-10 basis points, no more. What's going on is that if you look at the savings rate, the household savings rate, it's bottoming out, but very, very gently. And so what this means is that a lot of people are down spending the money from the government pandemic handouts. And so it means that some of them need to go back to work. So for that reason, I think we could see a slight improvement in participation, but nothing, nothing breathtaking. Other than that, we could see a recovery in wages, certainly in the median wage computed by the Atlanta Fed, simply because of the rebound in inflation, the strength in the labor market, things that distort measures of average wages, like overtime, are going down. So roughly, these are my expectations for the number, and this is a really important number because it's going to make it clear that the economy is moving to a faster growth path, which of course makes the job of the Fed more complicated. I mean, we also have the jolts, but I'm not a fan of the jolts. What I like in the jolts are quit rates and layoff rates, because the job openings, the ratio of actual hires to job opening has collapsed. Right. The lowest in the history of the series. So, you know, firms are advertising openings, but not filling them. So in my view, that data isn't very meaningful. Consumer credit is also important. The number we got in December was a bit of a disappointment. So let's see. It's clear that last year in the last quarter, there was a slowdown. Maybe it's climate related. Question of seasonal adjustment, maybe it's not, but I'd be curious to see what that January consumer credit looks like. That's about it, really.
It's interesting. There was a narrative after that big payrolls number, like this was a one-off for whatever reason, seasonality or some technical reason or reasons that will later get revised. But as you say, since then, most of the data has shown it definitely been much stronger. So the idea that we would go back to the path we were on before that number doesn't seem likely. So I guess generally your view is growth is stronger, continues, and inflation is definitely more sticky. And the path we've seen in the US, I guess even European markets should, you know, let's take UK out, but should continue. And I
Very
guess,
much so.
do you see Humphrey Hawkins being like a market moving event?
It's hard to know what is going on in Powell's mind. So, it seems to me that the strategy of the Fed to react to inflation print makes it sure it's designed to make sure they stay behind the curve. So I'm not sure that Powell has changed this strategy, which means, you know, he's not going to be that proactive. On the other hand, you look at the data evidence. If I was in his shoes, I would go for 50, but obviously I'm not. And he has a bunch of doves on his committee that he needs to listen to. So I think it's 50-50.
I was just going to ask you, yeah, what do you think of the chances for 50 at the next meeting?
I think we'll really find out on Tuesday when Powell.
Okay.
Yeah,
so it is that important enough.
Because he's still, he's given up on jawboning markets, but I don't think he's at the point where he wants to surprise market to bring them down. So if this is what he intends to do, he's going to hint at it. And then, of course, the NFP and the CPI are after Humphrey Hawkins, and the CPI is during the pre-meeting blackout. So if there is, you know, an outlier again, say 300 in NFP, or CPI at a 50 month-on-month core, yeah, that could put 50 basis points. But then, of course, the Fed will use its non-official channels, you know, Nick Timiraos at the Wall Street Journal and others to let the market know.
Okay, and thank you. Like we've been doing the last few months, I'll just quickly highlight some of the other articles by other people in the team, which I think people should check out. So for our professional clients, Bilal did a super interesting deep dive into the risk around India. You know, India kind of became this panacea for investors looking to diversify away from China. And now maybe that's kind of, some of that is getting just thought through a little bit deeper. But also, if you haven't been reading the Macroscope, it does give a really good summary of our overall views, our top trades, themes, beyond just the kind of, I would say, interesting, sometimes controversial, sometimes offbeat topics that Bilal likes to write on it. In the EM world, Caroline breaks down, we got some really interesting feedback from clients on her view of why she's very bearish to Zloty. And then, you know, we put out our China growth tracker this past week, and looking for, and there are some interesting takeaways, questions around is growth picking up, and what data is really showing that in China. And then for our kind of prime investors, and for all the people who are on Light, I would recommend, you know, the first month's free. It's absolutely worth checking out. We had some amazing articles even just this past week, one of which was Sam's doing a deep dive on the mother of all house crashes that kind of got picked up, I think, by like 10 different media outlets, but obviously understanding what can drive and where the risks are in the global housing market is super important. He did an amazing deep dive on that. Definitely worth a great read. Prime trades. So these are our favorite trades across markets for our prime clients. And then obviously crypto, the crypto industry tracker, and a bunch of interesting crypto pieces we put out this week at a time where a lot of people question, trying to understand why crypto had not followed kind of equity markets lower, more risk selling off, but obviously some of that caught up towards the end of last week. For me, that's, that there's a great summary, Dominique, on everything and your views. And as always, especially this past week, we've got some great feedback from clients, really kind of great interaction. I would say one of the better weeks we've had in a long time. Clients definitely seem to be really getting more proactive. I think, especially around your view and higher inflation kind of in the developed world, and thinking about how best to take advantage of that. So great work by you as well. Okay, any parting words or?
No, I mean, as always, please send us some feedback, and the more critical, the better. And other than that, good luck, everybody. This is not an easy market, but there are really opportunities. So I hope to talk to as many of you as possible this coming week.
Awesome. Okay, good luck. Good luck, everyone. Thank you.